Welcome to another episode of Texas Capital Live. We're here at November 14th, live from Dallas, Texas. I'm Steve Kennard. I'm the president of the AI Innovation Association, and I'm joined by my friend and colleague, Lee Bratcher, president of the Texas Blockchain Council. Lee, what have you been up to this week? I think you've been on the road.
Been on the road, got back late last night from Texas A&M.
Gig 'em? That's right.
That's when I was waiting for it.
You teed me up on that. It's our year.
It is. Played tomorrow against South Carolina. It should be a good game.
Yep.
A&M is world renowned as a institution, primarily for engineering, for all sorts of different academic disciplines. But in this case, we were down there talking about the explosion of the data center infrastructure in Texas. They have an ERCOT simulated grid that they run down there and do a lot of testing. Incredibly boring for the layperson because it was all electrical engineers talking about how ERCOT is expanding their footprint to accommodate data centers. But A&M again at the forefront of expansion of all these growth industries in Texas.
Boring, but crucially important.
Absolutely.
Right. And few can appreciate kind of the complexity of all the different scenarios that go into contemplating operating a grid the size of ERCOT for an economy the size of Texas that's booming right now and trying to keep up with that. And glad to see my alma mater continues to lead in that area, and you were able to make it down there, and they continue to convene kind of all these experts, different perspectives to actually deliver all of this power that we need as consumers, and then also with the data centers that we're trying to be a leading venue for that, while keeping that promise to people that, you know, the lights will still come on, power will be abundant and affordable. So important work. Thanks for doing that, Lee. I want to pivot now to the market headlines on this day. And you know, for market headlines, really for the week, I think we can say we're pivoting into full fear mode in the market, kind of red across the board. Finally, we're coming out of this government shutdown, and we were maybe hoping, okay, here's like some positive news. We'll turn a corner. That really hasn't been the case. With the government shutdown now in the rearview mirror, things have kind of pivoted to the perceived lack of a response from the Federal Reserve. We've seen major indexes down, technology leading the way in that. The big names, Tesla, NVIDIA, and Palantir, who are all kind of been Wall Street darlings, pulling back on this. And, you know, as recently as October 27th, the odds that we saw that the Fed would cut rates again in December were at 90%.
Yeah.
Today, they're at about 50%.
Yep.
So significant change in market outlook around the rate policy from the Fed. I think that's a lot of what's driving the negative, the kind of fear attitude we see in the market. I want to highlight a couple of interesting kind of announcements as well. Verizon has made waves by launching an $11 billion bond deal to help finance its acquisition of Frontier. That's a big capital raise, so we continue to see that in the market. We haven't seen as much kind of activity and excitement around the debt markets. So this is a pretty big deal on the fixed income side. We'll see how that moves forward. You have Charles Schwab announcing it will acquire private markets platform Forge for $660 million. This is part of this broader narrative of less and less companies going public, more and more companies staying private for longer, and that institutional and retail demand to invest in these private companies. So you're seeing kind of household name here, Charles Schwab, making a foray into providing more of an on-ramp for investors to participate in private markets. I like it as an investment. I'm disappointed as an American that we can't have more companies go public the traditional way. I think that's what the Texas Stock Exchange and Dallas in general is trying to solve that problem. Another interesting deal, TeamShares is a company that focuses on helping private companies shift to being employee owned. So kind of buying it out from maybe the family that's owned a business for a long time, and then letting the employees take over ownership and providing a platform that facilitates that and all the accounting around that. They are going to list publicly through a SPAC deal led by T. Rowe Price, valuing that company at $746 million. And this is, I think, a welcomed another chapter in kind of non-traditional channels like the SPAC that are filling more and more the dearth, frankly, in the traditional IPO market. Another IPO that I do want to highlight, though, that we had a filing from Grayscale that was one of the very first leaders in terms of providing institutional access to the digital assets market. Grayscale filing for an IPO. I don't think there's a date on that yet, but we certainly are going to keep an eye out for that. Those are the market headlines for this week. A lot going on, and we continue to keep an eye on everything.
It certainly is. And even as we're talking, the percentage chance of a Fed decision to decrease rates is down to 46%. So even in the
Wow.
last 5 minutes, it's down 4%.
Yeah, I was updating this not an hour ago, so that's remarkable.
It's fascinating to watch.
Yep.
Well, we have our first guest today, Ralph Safarian, who is a technologist, a thought leader, former senior vice president at Oracle, and now sits kind of in that chief revenue officer seat for multiple companies, is joining us to talk a little bit about TexCap, the conference that we hosted alongside our partners at SMU and AAPL a few weeks ago. We're going to update the audience on kind of the recap of that event. He's got some interesting things to share around some conversations, some executives who approached him at the event and asked him how they could get involved in this burgeoning Texas capital market scene. So, Ralph, thanks for joining us.
Thank you for having me, guys. Great to be here with you. Very timely.
Absolutely.
Wild week.
Wild week, to be sure.
A lot of fun to be had and a lot of opportunity.
Well, Rob, tell us a little bit more about your experience at TexCap. You had some interesting conversations that I wanted to share. Will allow you to share a little bit more.
Oh, great. Yeah. Well, first of all, thank you for extending an invitation to me to be part of TexCap, which was a really incredible event. And I'm trying to get centered here. I'm not sure what's going on with this camera, but there we go. But anyway, I just want to start by saying that it was a packed house, number one, at SMU. So great venue, great location. They were phenomenal hosts. And I just want to start with a comment, and I would say unbridled optimism.
I like it.
Is kind of my takeaway point that I want to lead with, in the sense that everybody I saw, I had a ton of sidebars the entire day and into the evening, and it was just a phenomenal session on a number of fronts. And everybody was, all the big names were there: NASDAQ, New York Stock Exchange, Texas Stock Exchange. Just the opportunity to be part of what you all have called, and many have called, the Texas Miracle. It was front and center, and just I think everybody wants to be part of this incredible momentum that's happening in Texas, and also the Texas Stock Exchange, and they want to know how to play, from individuals all the way up to institutions, with HQ moves like many that we've talked about, Coinbase and others, and certainly the financial institutions moving people here rapidly, and other large institutional HQ moves to Dallas. I came back to Austin after the event and told everybody that Dallas is going to be the new center of the universe. I think I mentioned that, Lee, to you earlier today.
That's right.
And people are all ears.
And we just 2 days ago, we saw NASDAQ, of course, was at the event, but 2 days ago, they announced NASDAQ Texas in the same vein as NYSE Texas. And so we're seeing them set up their kind of second global headquarters, the first one outside of New York, here in Dallas as well.
Yeah, big news.
Yeah.
So Ralph, tell us a little bit more about some of these conversations. How are you feeling like, as a former technology executive at Oracle and now an investor and thought leader, what would you say to a business person or an investor who says, where's my first step in getting involved in Texas capital markets? Say they're an investor or perhaps an investment banker. What would you recommend?
I would say get educated first, starting yesterday. Okay, because I think the train is rolling out of the station, or it may have already left the station, but we haven't left anybody behind. And I would say, I'm a big proponent of picks and shovels. So your point about Texas A&M and the work being done to build data centers, all these worlds are coming together. AI, Web3, crypto, blockchains. These worlds are going to live and coexist together. So there's ample opportunity to participate for institutional investors and also individuals to play in this world. And I think number one item that I would suggest we need to be doing as an organization, as purveyors or ambassadors for the state and for the impact on the whole United States. It's that big. Is teaching people, how do we play? How do we participate? I think there's lots of ways. I mean, Steve mentioned earlier that folks are interested. I mean, more IPOs would be great, and having multiple platforms to engage, whether it's NASDAQ Texas or Texas Stock Exchange. Those are places where people need to engage, but they need to be taught how to do it and shown the way to engage with the organizations.
And you said
so.
picks
That would be
and
my first comment.
Yeah, you said picks and shovels, Ralph. So let's think about those kinds of companies that are going to need to relocate here to Texas. I mean, Broadridge Financial Solutions does a ton of proxy and post-trade regulatory reporting. That's a massive company. They have a ton of presence in New York. I would imagine they are considering some sort of Texas presence. Of course, you've got the clearing companies, DTCC, and others that I'm sure are looking. I think those of us that like tokenization are hoping that DTCC gets put out of business one day. But in the interim, they're going to certainly need to have a relationship and perhaps even a physical presence here in Dallas with the public exchanges. And then you have the markets and data analytics firms. I think Bloomberg would certainly be remiss if they didn't show up with a larger presence in Dallas. Are there others that, Ralph, you're thinking of, or Steve? Ralph, we'll go to you.
Yeah, I think a lot of the traditional Silicon Valley analytics companies, just to play off of what you said about analytics in general, I mean, I think that the whole concept of AI governance and AI analytics in general is going to be part of this. So, I mean, all those firms have to have a presence here. How that threads into the new exchanges remains to be seen. But I mean, all these organizations need to participate in this new economy, or I should say the adjusting economy. I don't know if it's a new economy, but it's an adjusting economy, which includes a lot of players that are already out there, but they need to engage in the new train that is so AI driven.
Yeah, and I even saw a job posting. Actually, it wasn't a posting. Someone held this position at Texas Stock Exchange, head of data center operations.
Interesting.
So they're obviously thinking about their trading algorithms and clearing algorithms and how those will process. I think obviously if you're trading here in Dallas, you're not going to send those to the New Jersey data centers, and every millisecond counts in trading. So I would imagine those would be handled here in the DFW area.
I think that'll be a pressing question, is kind of where that ultimately is housed, and then you have different jurisdictions with different laws that present different kinds of risks. But New Jersey has been dominant in that data center space. Ralph, I'm curious. You kind of come from this mega corporation background, and then you've transitioned to kind of more of an entrepreneurial focus. And what we want to see a lot of in this kind of emerging Texas capital markets boom is a capital markets that serves more than just the mega corporations. I think that's the vision of decentralization that we spend a lot of time talking about. I wanted to get your perspective from having lived that firsthand and kind of what your near-term outlook is as we prepare for launch of the new exchange here, and sort of what do you think this next year, what does 2026 look like for you in terms of priorities or particular areas or maybe particular companies that you're engaging with? Just wanted to get your perspective on that.
Well, like I mentioned at the beginning, I think the opportunity is huge for me and for organizations that I'm part of, and that includes some emerging growth companies. One thing I neglected to mention earlier, and I'll kind of tap on this as I answer that question, is the whole concept of cybersecurity is just front and center. Mm-hmm. I mentioned AI governance, but it's the whole security component, which is not new in the tech space, is just going to become more and more important as we talk about tokenization and we talk about blockchains in general and more advanced ways to communicate, transact, the internet of value, whatever you want to call it. So I see opportunities there wherever we can facilitate either these new rails that are coming, or we modernize some of the more existing infrastructures that are already out there that people own already, but they're going to have to learn how to communicate with, as I call it, the new world. So I see lots of opportunities there, and we're having a lot of discussions as tech advisors with either mom and pop shops all the way up to large corporations that are trying to figure out how to do this. Because, as everybody knows, the hype meter is full blown, right?
Yeah.
And people need to understand, okay, what's real? Where do I really spend money? And how do I get ROI?
Yep.
That's right. Well, Ralph, we appreciate you coming on and joining us on Texas Capital Live. I'm sure we'll have you back here in the near future.
Thank you, Ralph.
Okay. Thanks, guys. Appreciate being part of this, and talk soon.
Yes, sir. All right. We have an exciting kind of next plan here. And, we spend so much time talking about the future and innovation and new things and all of that. Sometimes it's nice to return to the old way of doing things. I enjoyed an early morning with the physical newspaper, the Wall Street Journal. I kind of got in here early. I was here all alone. It was just nice to sit down and flip through a physical paper, drink a hot coffee, get a highlighter out. But I will note that today's paper had a number of articles that actually really jumped out. And I was like, this is really, I think, worth discussing. And so wanted to take some time to bring back the old school physical paper, read a few articles, and let's just chat about this because I think there's some really incredible stuff going on. Front page of the Wall Street Journal today, Chinese hackers automated attacks using Anthropic's AI. Now, before I get into the article, I wanted to talk a little bit about some of the background that's been going on with Anthropic. Anthropic's one of maybe 5 big American AI labs building foundation models. And they've been in the news for reasons they probably wish were not the case, which was the Trump administration, and particularly David Sachs, who's the AI czar, was calling them out for a lot of their political advocacy, sometimes in the public and also behind scenes, around government regulation of AI on the grounds of this is a threat, it presents a risk, and the government needs to increase its oversight. And I think AI safety is kind of the buzzword around that. Worth noting, Anthropic, I think, was the only major company that fairly early on was a supporter of SB 53 in the state of California, where they're headquartered, which was the California AI safety law that many AI companies were opposed to for its potentially onerous provisions. So that's kind of where Anthropic's been coming from. Now they're making headlines with a pretty astonishing event here. And from that cybersecurity perspective, as we were just discussing with Ralph, it says China's state-sponsored hackers used artificial intelligence technology from Anthropic to automate break-ins of major corporations and foreign governments during a September hacking campaign. This is maybe not all bad, though, as often criminals like to use the best products. It's kind of like, it's like Al-Qaeda only used Toyota cars. Well, maybe you don't want that, but it's also saying that they're the best cars and they don't break down. And they figure that out. So it's not all bad maybe in that way. 80 to 90% of the attack was automated. So this is kind of the first AI agent cybersecurity attack with major implications making headline news. In one case, the hackers directed Anthropic's Claude AI tools to query internal databases and extract data independently. This summer, the cybersecurity firm Velexity spotted China-backed hackers using AI tools to automate parts of a hacking campaign against corporations, research institutions, and non-governmental agencies. Last week, Google reported that hackers linked to the Russian government attacked, and then you got to turn the pages, old school, attacked Ukraine using an AI model to generate customized malware instructions in real time. So I'll pause there because there's multiple examples here of state-sponsored cybersecurity threats and attacks starting to leverage American-developed AI tools. I expect this kind of headline to increase of the controversy around the distribution of American technology and then potentially being used against us. Now, at the end of the day, I say the solution for having good technology developed here used against us is to develop better technology here. And that's a little bit, I think, where this article ends up going. It says, Anthropic said it was confident, based on the digital infrastructure the hackers used, as well as other clues, that the attacks were run by Chinese state-backed hackers. Hackers often use open-source AI tools to conduct their hacking because open-source code is available for free and can be modified to remove restrictions against malicious activity. But to use Claude to conduct the attacks, the China-linked hackers had to sidestep Anthropic's safeguards using what's called jailbreaking. In this case, telling Claude that they were conducting security audits on behalf of the targets. So again, this is a major discussion point we've seen in terms of AI regulation, particularly in the last administration, was we need to restrict or outright ban open source AI because it's free and it's open and anybody could take it and attack us. Well, you see these jailbreaking techniques as well that are really undermining that whole narrative. Particularly, there's two sides to every coin. So particularly when you consider, yes, there's a risk, but there's also the prosperity and innovation from having an open ecosystem that everybody can contribute towards. I'll finish reading from the article here. The automated hacks weren't capable of being fully autonomous. I think that's important to note. With so-called AI hallucinations leading to mistakes, it might say, I was able to gain access to this internal system, when it wasn't. It would exaggerate its access and capabilities, and that's what required the human review. So the headline is the AI did everything 80 to 90%. Okay, but the last 10 or 20% matters. And ultimately, you still have humans in the loop, particularly state-sponsored actors that are using this technology. So I thought a really interesting article on the front page, worthy of being on the front page, in my opinion, because it's this sort of next chapter of the debate around AI regulation. And frankly, in my opinion, the futility of artificially restricting technology because people are going to find a way to use it for good and for bad. That's just life. We can talk about how to diminish the bad while amplifying the good, but outright bans, just not effective in this global economy.
No, they're not. And we're just getting our hands around defending against attackers that are 100% human driven,
Right?
bad actors. And so now we're needing to contend with AI driven hacks as well.
For years, that's been the case, the cybersecurity against humans, and now there's this whole new frontier.
A whole new frontier. Hopefully the white hats can use some of that AI to defend as well.
Yeah.
That brings us to our next headline. We saw that Warner Brothers in the news again. Paramount's making a bid for Warner Brothers, an unsolicited bid, we might add. One of their previous bids was rejected by the board of Warner Brothers a few months ago, but those bids are now back. We have
got a bidding war
Netflix.
going.
We got a bidding war. Netflix and Comcast are preparing their bids as well. Comcast and Netflix are primarily interested in Warner Brothers movie and television studios and the HBO Max streaming service. But it's the cable network holdings, CNN, TNT, Discovery, et cetera. Those aren't as of interest. So Warner Brothers is now considering splitting into two separate companies so that it'll make some of the parts greater than the whole. And some of the attractive bids that are coming in from Netflix.
If I were a betting man, I got to bet on Netflix, not just for the deep pockets, but has there ever been a more obvious combination than HBO with Netflix?
Yeah, true that.
I mean, think about the incremental value from that distribution. Also, the kind of mask off moment of everyone saying the legacy media part of this, CNN and whatnot, is not interesting.
Yeah.
Business in terminal decline. Be interesting to see if anybody will step up and buy it.
I don't know. I think they're saying it's going to take more than a 90% premium on the shares to close the deal. The previous deal was rejected in that $20 per share range, and now they're saying it's going to need to be about $30 a share to close the deal. So it's a pretty big premium for a legacy media company. But HBO is extremely popular and has some amazing shows. So, these streaming services, it's like you just need to have that one viral show, and then everyone feels compelled to sign up and gets hooked on the other content that's on the platform.
You're caught forever, and that's the real value, is that network effect.
Yeah.
In addition to the legacy shows that HBO brings that are like, you can never reproduce The Sopranos. I mean, that's like a once in a generation show that people will watch forever. I can understand how that drives this sort of bidding war. It's just not every year or really ever that this kind of deal comes around, and Paramount, backed by the Ellison family, really forced it with like a very aggressive bid, right? And then now you've got more people at the table. Now the market's kind of rocky during the middle of all of this, so maybe all of a sudden that premium looks less, if it's the Ellison family, the Oracle stock's down about 30% in the past month. So a lot of moving parts here to see something come together. I think it's something worth tracking, though, because it will set probably a new high watermark in terms of media valuations for these big brands. The creative portions of the streaming enterprise are being swallowed up at higher and higher and higher multiples. and then the legacy kind of cable TV businesses are going down, down, down. So total disconnect, I think, between two
people don't
different
even
types of
want
business.
this, TNT and Discovery and all the cable channels that Warner Brothers owns. So
Really interesting. Okay, I want to pivot on to some commentary and news made by the Pope, not the typical person that we would discuss on a show like this, but give the Pope credit for being a pretty prolific poster, actually, on X and other outlets, and addressing a really wide array of topics. And in this last week, that has included technology and AI. I want to read two posts from the Pope that on his X, and then I thought a really interesting article addressing this in the journal. So the Pope says here, technological innovation can be a form of participation in the divine act of creation. It carries an ethical and spiritual weight, for every design choice expresses a vision of humanity. The Church therefore calls all builders of AI to cultivate moral discernment as a fundamental part of their work, to develop systems that reflect justice, solidarity, and a genuine reverence for life. Now, notable VC investor Mark Andreessen got in a little bit of hot water for responding to this with the meme of the liberal journalist that was interviewing Sydney Sweeney and kind of got shut down, kind of saying, oh, you're pontificating about ethics in business. I'm not sure it was meant in bad faith. I think there was a lot of blowback over that was probably misplaced. But the reason I wanted to highlight it is what a world we're living in, where you have kind of business magnates and the Pope interacting directly on X, talking about ethics. To me, it's a moment where this discussion around how do businesses and investors develop technology and AI, and what does that mean from a moral, human, and theological perspective, that's starting to come in the headlines. The Pope also posted here, the world needs honest and courageous entrepreneurs and communicators who care for the common good. We sometimes hear the saying, business is business. In reality, it is not so. No one is absorbed by an organization to the point of becoming a mere cog or a simple function. Nor can there be true humanism without a critical sense, without the courage to ask questions. Where are we going? For whom and for what are we working? How are we making the world a better place? I got to say, I think that's an excellent post.
pretty profound.
I think that's
Do we
worth
think
everyone
he wrote
stopping
it
and reading.
himself?
Good point. Like
I
this.
don't think so.
Is there a staff? Did an AI write it? What kind of AI?
Right.
Fair point. Feels pretty polished. Probably went through an editorial process.
Yep.
But credit to the Pope for bringing a lot of attention towards this. Now, interestingly, in the journal, you have an article here. AI is a tool, not a soul. That's the headline here. Co-authored by Kristen Ziccarelli, whom I've not had the pleasure of meeting, and Joshua Trevino, who is a Texan friend of mine and works at the Texas Public Policy Foundation in Austin. So, Joshua, well done on this article. I enjoyed it. I want to read a few excerpts that kind of expounds on this debate and this new emerging field of the Pope's addressing AI and ethics. It says, we have moved from the likeness of thought expressed through artificiality to the plausible existence of the real thing artificially achieved. The leap from form to substance is profound and its consequences unknown. If conceived as an alternative to humans, the Pope said, the technology can gravely violate their infinite dignity and neutralize their fundamental responsibilities. Pretty strongly worded statements there. It goes on to cite other quotes. Like all human invention springs from the creative capacity that God has entrusted to us. It is therefore a form of participation in the divine act of creation, but not a divine act of creation itself. The only creator of life and of man is the creator, capital C, creator. Yet this is consequential to more than Catholic thought. I think here's where it's important. This isn't just about a single church or a single person. The premise underpinning Pope Leo's rhetorical turn from anti-Semitism to AI and his commentary on Nostra Aetate, that's some Latin words there that I struggle to read, on the nature and meaning of the image of God and man, is also the premise on which the U.S. was founded, a nation that declared independence on the premise that men are endowed by their Creator with certain unalienable rights, finds its own existence premise skewed and even contradicted if rights are granted otherwise. In this case, granted to a machine, an algorithm, or a model. What this means for policymakers is obvious. AI, understood as a tool, is subject to the ethical concerns and strictures of all other tools. AI, understood as a being and bearer of rights, by contrast, is morally unacceptable and ontologically wrong. Again, AI is a tool, not a soul. I think this is very well written, and I couldn't help but think of another headline I saw in my feed this week. I think it was a woman in Japan. I think it might have been Korea, that married an AI model. She created a personality within an AI and actually went and got a marriage license, and the government recognized this. Now, we can all kind of laugh and say that's dystopian. We can also recognize that this AI psychosis trend is real and is increasing. And I think that's what this article kind of forces us to grapple with that. So well written, and I hope the Pope continues to comment on this. I think it's healthy for society.
Yeah, agreed. Well, moving from that, the software side of AI to the hardware side of AI, we see that Baidu unveiled recently 2 new AI chips that they're using to compete with AMD and NVIDIA and the likes of the superpower AI companies. This is obviously a tightly controlled company, Beijing-based company, and launching the M100 chip in 2026. It's designed by the engineers there in Beijing. Baidu's announcement follows Huawei's reveal of a similar AI chip pipeline in September. I'm concerned here that this is a failed policy moment for what we're trying to do with NVIDIA by keeping NVIDIA chips from China, essentially.
Mm-hmm.
So we're seeing necessity be the mother of invention. We're seeing China, top 2 leading companies, Huawei and Baidu, developing their own chips to compete with NVIDIA and AMD chips. I think, I don't know if the answer is open up the market and let them buy NVIDIA chips, but we are compelling them to create NVIDIA and AMD competitors.
Right.
I'm not sure if that's a great policy outcome.
Yeah, and the CEO of NVIDIA has been very vocal on this, right? Jensen has repeatedly said, we're hamstrung, we're not selling to China, and we should be. I can appreciate that. Obviously, he stands to make an enormous fortune for that, so it's not that surprising. It'd be his opinion. But I think it goes beyond just kind of personal interest. The point you're making is that the Chinese have already demonstrated that they are, in terms of this technology, at a minimum, a near peer, if not a peer. And I think the moment that became abundantly clear was with DeepSeek about a year ago now, when they were able to develop a frontier model that was very competitive and open sourced, by the way, with all of the restrictions in place around the hardware. And to your point that the restrictions were kind of the mother of invention, they couldn't get the most efficient hardware. So what did they do? They figured out a way to create a competitive model with even higher efficiency so that the hardware kind of wasn't the bottleneck at that point. And what a clear example of this. I'm with you. I don't know how to, you want to say, well, we shouldn't sell to China and we can overtake them as...
That just makes us feel good. It doesn't actually solve the problem.
It feels good, but then you have to confront this reality that they have a tremendous amount of momentum in terms of the development of new technology. And this is a nuanced issue, and it's probably something that continues to evolve, right? That chip, I think, is scheduled to be released next year. So this isn't kind of this, hey, years and years down the road, we're going to do this. It's very much in the near term. And so we're going to start to see just how competitive
that makes
they are
4 chip companies. You got SMIC,
right.
You got Alibaba, you got Baidu, and you got Huawei.
Yeah.
4 Chinese microchip giants.
Yeah. And at least Baidu, I think, continues to be publicly listed in the United States. So you've got some tension there as well. Are our capital markets kind of funding our own competitors? I don't think we've heard the last of that issue.
No.
Yeah. Hey, it's been a big week and an issue near and dear to both of our hearts, which is Bitcoin payments and Bitcoin kind of proving itself to be a legitimate basis for the future of money, the future of the economy. Square, the company founded by Twitter founder Jack Dorsey. Of course, he's since left Twitter, so Square has kind of accelerated their innovation cycle and has rolled out Bitcoin payments to all of the merchants that use their payment terminal. Now they have to opt in. We've got a cool video here of someone using this just at one of the local coffee shops, because how many times do you go in somewhere and they use a Square terminal? I think they're one of only a few companies out there.
Yeah, they have a big market share. It's like half.
It's huge. And so I think this is one of the biggest moments. It's gone over kind of quietly in a way, but in the history of Bitcoin adoption, I think this is a huge moment. Huge congratulations to Square, because I can tell you years ago, I remember going to meetings where they were saying, we're going to roll out Bitcoin payments on all our terminals. And I think they were confronted with various both regulatory and technical hurdles to make sure they could deliver on that. Now they're showing that they're delivering seamlessly. I want to talk a little bit though. Why is this a big deal for the merchants and for people that don't care about Bitcoin?
Yeah.
Okay.
Yeah.
So I want to give an example. So if you have Cash App, which is also owned by Block, owns both Square and Cash App, right? So Square's more merchant facing for payments, and Cash App is on anybody's phone. And so you have these both kind of working together. And I've been a Cash App user for some time. I think it's really cool. You go into your home screen, you've got a Bitcoin section there. You click on that. You scroll down, there's a subtitle there, ways to use Bitcoin. And then there you got a little button, spin Bitcoin, find nearby businesses that accept Bitcoin. And you get this cool little map. This is from where I was sitting this morning. I clipped this, and you can now see the different businesses that have opted in to this Bitcoin ecosystem. Now, my recommendation, humble recommendation to Cash App, is that they make this a little more prominent, because you got to scroll here, click there, you got to kind of go and find it. But once you open it up, it's super easy to use. And so I couldn't help but see there, it's a little hard to see on this map, but down at the bottom, right in downtown Dallas, you have this store. I'm going to pronounce this Moody's Bagels, MOUDI', Moody's Bagels in Delhi, right in downtown. I'm inclined, frankly, to go down there and
buy
get a
something with
bagel.
Bitcoin.
Here's the example I want to give, though. Bagel at Moody's, $4. Okay. Typical charges for credit card is 2.6% and 15 cents. The 15 cents is important because if you're buying a $4 bagel, you got the 2.6%. The 15 cents is another 3.8% on top of that. So now you're up over 6% total fee to go and buy a bagel. Now, in a relatively lower margin business, as food services tend to be, that's really meaningful. That's for in-store purchases. A lot of purchases are transitioning more to online and payment through app. Those tend to be served at a little bit higher cost. You have 3.3% plus a 30-cent minimum. So again, you go buy a bagel, $4, all in, you're going to be over 10% cost.
On fees.
Just on the fees, just to facilitate this payment. Compare that to the Lightning Network, which is a layer 2 built on top of Bitcoin that is facilitated through Square's offering here. And you're talking about fees in the fractions of pennies, basically a rounding error to zero.
Even on a $4 bagel, it's far less than 1%.
This is really significant. I mean, when you live and die by a couple of percent this way and that in terms of your business margins, I think this is a lot more revolutionary than people understand, and I think that's going to drive adoption. Now, Square has also said they're going to facilitate stablecoin payments in the app as well. That's going to be launched on the Solana blockchain. But ultimately, they have this kind of Bitcoin first ethos. Why? Because you're not trapped in the Square ecosystem. And this is what I saw some of this online this week. I thought it was just really cool that people were saying, you've got this Square terminal. Maybe somebody uses Cash App to pay. Those are owned by the same company. Okay, but anybody can walk in with any Bitcoin wallet, of which there are thousands you can choose from. And you can pay either dollar denominated or Bitcoin denominated there. Meaning you could come in with just some Bitcoin wallet. Maybe you're here from El Salvador where it's legal tender. And it is absolutely seamless. No issues converting currency this way or that. And you're paying with almost no fees. I think Square's got to take a bow on this, and people have to recognize this is just a really cool thing. I hope to see more little dots on that map, by the way.
I agree, and I think they've got Bitcoin to Bitcoin, Bitcoin to dollars, dollars to Bitcoin, and then I mean, any way you slice it, the merchant can take it in dollars or Bitcoin. You can pay in dollars or Bitcoin. It doesn't matter. The one thing that's missing now is a de minimis exemption so that you don't have to calculate capital gains when you spend Bitcoin that you have a lower cost basis on.
That is the mission. That is the mission. I think that's part of the pitch as well, and perhaps what also drove a lot of the desire to have the stablecoin offering. So you're not, if you're converting Bitcoin you've held for a while and you've got a gain on it, you do have a tax issue there. I think that's a very fair and important thing to highlight around this. We're going to have to go try some of these places out, though. It's pretty cool. Absolutely. I knew Steak and Shake was leading on this. And we've got one not far from where we live. But today was the first day I found out about this map and was like, this is really cool. There's like a hair salon in there. There's a place you take your kids to. There's like baseball batting cages. I mean, just all random everyday businesses. So really cool to see that. Well done, Square. Excited for the future of that. We want to finish on a segment about an important event here in the city of Dallas. You know, the mayor, Mayor Eric Johnson, once a year gives a State of the City address. That address was given yesterday, notably not at City Hall, but at the offices of the Texas Stock Exchange. And I thought it was a fitting location. And I wanted to play a video here of some of these remarks that the mayor gave yesterday.
With the help of a new public-private partnership, crime is down by double digits in downtown Dallas, including a nearly 40% drop in aggravated assaults. This is what happens when our business community and our city government work together and put public safety first. While our economy is incredibly diverse, in recent years, Dallas has clearly emerged as a national leader in financial services. In fact, our region has added 100,000 new finance jobs in the past decade, and we are now second only to New York in the size of our financial services sector. So it's no surprise that Dallas is home to this exciting new Texas Stock Exchange. And it will come as a surprise to no one when Y'all Street eventually overtakes Wall Street to make Dallas the undisputed financial capital of the United States. Because when you consistently say no to socialism and yes to economic freedom and to business-friendly and worker-friendly policies, the result is that in America, all streets lead to Y'all Street, and all roads lead to Dallas.
I love it.
Great comments from Mayor Johnson. I thought the tagline behind him, "The bull market lives in Texas," that's just perfect. Well done, Texas Stock Exchange. Three main pillars I think that he made very clear: public safety first, no to socialism, yes to economic freedom. Unfortunately, New York is going the opposite direction in all three of those areas. And I'm glad that he was willing to really come forward with that and say, we are devoted to these three things because it's working. And we've gone from a time when it was laughable to it's actually happening. His comment that Dallas can and will become the undisputed financial capital of the United States. Great speech, another step forward for the city, and just awesome to see the mayor engaging that way.
The train is going, and you got to get off the tracks or get on it, one of the two. Thanks for joining us, guys, for this episode of Texas Capital Live. We'll be back with you next week.